Good day. This is ACT113, Elements of Banking. I will be taking you through study section 6, Merchant Banking. Merchant banking occupies a very important position in the banking system of many economies of the world. It is a bridge between the traditional financial services rendered by the commercial banks and the development banks. When you have studied this section, you should be able to explain the concept of merchant bank. You should be able to state and explain the functions of a merchant bank. And lastly, you should be able to differentiate between merchant bank and commercial bank. The concept of merchant bank. The merchant banks do not mean the same thing as the commercial banks. Merchant banks are involved in wholesale banking, whereas commercial banks they simply involve in retailing banking. In this study section, you will learn about the merchant bank, and at the end of this session, you will appreciate its role in the economic as a provider of long-term funds for development. Generally, merchant banks are designed to provide medium to long-term finances to the economy. They are not actually structured to provide short-term finances, considered a primary function of the commercial banks, whose liabilities are characteristically short-term in nature. Merchant banks could be defined in terms of the functions they perform in the economy. Merchant banks. They are otherwise known as acceptance house or investment banks because operation in Nigeria in 1960 when the Philip Hill Nigeria Limited and the Nigerian Acceptances Limited (NAL) were registered. These two banks merged in 1969 to form NAL. In 1974, First National Bank of Chicago Nigeria Limited, First National City Bank of New York Nigeria Limited, and Chase Merchant Bank Nigeria Limited were established. In 1975, Icon Limited merchant bankers began operation. The Nigerian American Merchant Bank Limited was established in 1979, and in 1982 both the Merchant Banking Corporation Nigeria Limited and the Indo-Nigeria Merchant Banks Limited were established. Now the number of merchant banks is large. Merchant banks is different in different countries perform various functions, but there are some activities that are basic to all these functions. These are deposit banking, underwriting, and the management of clients. Merchant banks, unlike commercial banks, concentrate on wholesale banking. They concentrate on wholesale banking. They cater for the need of corporate institutional customers and as such accept only relatively large deposit of 50,000 naira and above. In Nigeria, the bank and other financial institutions decree number 25 of 1991 legally defines a merchant bank as a bank whose business includes receiving deposits on deposit account, provision of finance, consultancy and advisory services relating to corporate and investment matters, making or managing investments on behalf of any person. Merchant banks are best known in the UK as Acceptance House and investment banks in the United States of America. Organizing structure of merchant banks. The merchant banking system was fashioned after the unit banking system of the American commercial banking system. The merchant banks run unit banking system that does not permit the opening of branches outside the head office. The merchant bank is best run by a team of management that is responsible to the board of directors. The managing director oversees the day-to-day activities of the bank, which includes the supervision of the key functional departments such as banking, portfolio management, operations, treasury, and corporate finance services. This is the organizational structure of a merchant bank. As you can see, from the board of directors to the managing director, and we have other departments, which are the banking department, the portfolio department, the operations, the treasury, and the corporate finance services. Let's talk about the functions of merchant banks. The function of merchant bank may be grouped into five as follows, as you can see on the slide. The first one is the portfolio management function. Most merchant banks in Nigeria have investment departments set up to manage the portfolios of customers. This includes arranging purchases and sales of securities and offering advice on when and what to buy and sell, as well as attending to registrations, rights, or bonus issues. Secondly, banking function. The banking function includes one, deposits. Merchant banks deposits are provided in the form of fixed term deposits, usually from corporate and non-corporate customers. The deposits are only in large blocks with minimum of 50,000 naira at present. The deposits are not withdrawals with checks. Certificates of deposit are used for interbank transactions. Under banking functions, we still have another one called loans and advances. Merchant banks provide loans and advances to industry and commerce. The merchant banks, like commercial banks, provided loans and they provide loans and advances of short, medium, and long-term nature. The central bank directs that a minimum of 4% of merchant banks' total loans and advances shall be of a medium and long-term nature, while maximum of 20% shall be of short-term nature. Also, equipment leasing. Leasing is a method of financing which enables a company to rent industrial equipment instead of buying it outrightly. Leasing involves the purchase of equipment by a bank for a client who is unable to pay for the cost of the equipment at a time, but it takes the possession of the equipment in installmental basis over a period of time. Let's talk about the third function, which is the corporate finance services. The corporate services include acting as number one, issuing house to issuers. Merchant bank act as issuing house in the capital market. In this role, they provide financial services to corporate entities, including government parastatals, and companies seeking to raise long-term or permanent finance for their operations. Project financing. Project financing as a project loans are terms which describe the method that banks, especially merchant banks and other institutional lenders in Nigeria, use to finance the construction of new projects on a basis whereby repayment is anticipated from the revenue stream generated by the services. Let's talk about the third function, which is the treasury services. The merchant banks do invest in money market instruments such as treasury bills, treasury certificates, and so on. They also issue short-term instruments such as certificates of deposit, commercial papers, and so on and so forth. And let's talk about the operation functions. This includes the remittance and receipt of funds for their customers at both local and international levels. Merchant banks also open letters of credit and accept bills on behalf of their customers in favor of foreign creditors and issued by the creditors respectively. Let's move on as we discuss the main sources of funds to merchant banks. And the main sources of funds to merchant banks include share capital, statutory reserve, interest arising from credit facility and other charges, retained profit, debentures, mobilized deposit, and borrowing. We are going to explain some of these sources of funds. Let's explain share capital. Funds are raised through the insurance of shares subscribed to by the individuals, bodies, corporates, and governments. What about statutory reserve? The funds statutorily are required to be transfer from profit to reserve account is available for use by the bankers. Interest arising from credit facilities and undercharges, that is, the cost of funds provided to borrowers as well as various charges for services rendered from part of merchant banks' funds. Retained fund profit. This is the percentage of the net profits retained for future expansion. Retained profit remains part of the shareholders' equity. What about debentures? Merchant bank raise money through the issuance of debentures. Mobile deposit. The whole deposit mobilized from the company forms part of the merchant bank funds. And borrowing. Merchant banks may borrow money from lending institutions, including central banks of Nigeria. So let's talk about some of the major differences between merchant banks and commercial banks. The major difference between merchant banks and commercial banks are as follows. The first is merchant banks are wholesale bankers accepting deposits only in large blocks with a minimum of 50,000 naira, while commercial banks are primarily as retail bankers. Thus, while commercial banks do business with individuals and companies, merchant banks concentrate on corporate customers. That is under deposit acceptance. Let's talk about merchant banks involved in parties involved. Merchant banks operate as wholesale bankers with only few branches, while commercial banks as retailers really need a wide network of branches. Merchant banks provide mainly medium and long-medium finance, while commercial banks grant short-term loans and advances. While commercial banks accept deposits from all and sundry, merchant banks depend on public and private corporations. In their lending activities, commercial banks deals with a wide variety of customers, while commercial banks deal with mainly in the acceptance of discount commercial bills to finance trade and corporate customers. So I hope you have been able to understand to some extent merchant banks and its operations. As you go on to other study sessions, you will learn more. I hope you are going to continue and you are going to study it very well. Thanks for listening.